Hello. Today we're here to talk about avoiding bad C-suite hires in private equity portfolio companies. My name is Eric Walzakowski, and I'm the CEO of Bespoke Partners, a firm that cares about private equity software talent in portfolio companies all day, every day. That's our heritage. We started in 2011 with that mission. I'm a career operator, and my entire career has been spent getting the right teams in place to execute on value creation strategies. I'm joined here today by Mike Song. Mike is an esteemed colleague, friend of the firm, and client with Providence Equity Partners. He's been there over 13 years. Before that, he was with RSA, the security division of a Dell EMC company, and before that was with Bain & Company. Welcome, Mike. Would you like to say a few words about your firm?
Yeah, thanks, Eric, for having me. I'm really excited to be here today. Just to provide a brief background on Providence, we're a $35 billion asset under management firm. We're a sector-focused investor, so we invest in the media, telecom, communications, and software and services spaces. And we're growth investors, so we're investing in companies in the upper middle market. And our goal is to really help growth companies drive even faster growth through both organic and inorganic initiatives.
That's great. Thank you, Mike. I would also like to introduce Brian Kasser. Brian is the lead talent partner in the technology group at Welsh, Carson, Anderson, and Stowe. Brian has been working on executive teams in private equity for a long time now, both at Welsh Carson, but also Lightspeed Venture Partners. And before that, he was the practice lead of the software industry at Russell Reynolds. Welcome, Brian. We'd love to hear a little bit about your firm.
Well, thank you, Eric and Tess. We really appreciate the invitation today. Just by way of background, Welsh Carson is a 40-year-old middle market private equity firm. Currently, we are investing in our 14th fund, which is a $5 billion fund. We focus on software and healthcare. So those are our areas of specialization. And again, we find great growth-oriented private equity companies in the middle markets.
Fantastic. Thank you. And finally, I'd like to introduce my partner, Tess Fisher, who runs our go-to-market practice. She has over 17 years of building and managing networks, clients, and teams in the private equity space. Prior to Bespoke, she held leadership roles at both Vista and GLG. Tess, would you like to share a few thoughts on our firm?
Yeah, thank you, Eric. Bespoke Partners is an executive search and leadership advisory services firm, and we're really the largest firm focused exclusively on software with a specialization in private equity. We now have over 100 employees across the country, and we've conducted over 1,000 executive searches. Because of our focus in software, we have an unmatched network in the industry, and we pair this with a thorough and data-driven process, back channels, and behavioral assessments, and that leads to an industry-leading 99% success placement rate.
Fantastic. Thank you all. I'd like to encourage folks to leverage the chat to ask questions throughout the discussion here today. We'd like to make it as interactive as possible. And so when we talk today, what we're going to be talking about the costs of a bad C-suite hire, today's climate and mishire risk, and best practices to reduce mishire risk. The other thing I'd be remiss not to mention is we are releasing the second edition of our private equity talent benchmark report today. So you'll have the opportunity to pick that up. If you haven't read the first edition released in January, I encourage you to take a look at that. What we did over the last 6 months is we looked at the last 6 years of executive turnover in private equity software, following the top 50 firms in the space and mapping how those executives turned over at scale, what order, who filled the position, whether it was a step up or whether it was a proven executive. We then took our proprietary compensation data and overlaid that to provide a very thorough analysis of the private equity software executive talent landscape. So when we dive into it, to kind of set the stage, the monumental costs of a bad C-suite hire, I can't think of anything better to describe this than the iceberg. And the idea that protruding from the top of the water is a small vessel or obstacle. And that really represents the direct costs of a bad C-suite hire. We think about wasted compensation, severance, misaligned, incorrect strategies and resource consumption, staff morale and confusion, and recruiting time and costs. But that truly, as they say, is just the tip of the iceberg, because looming beneath the water are the indirect costs and the strategic impact that tend to be much greater than the direct costs. And when we think about indirect costs, we think about brand and reputation impact. We think about customer experience issues. We think about lasting staff morale issues after a C-suite departure. We think about strategic impact and the delay in the value creation execution plan. We think about longer than expected hold periods. And then we think about that lingering poison tainting the company. Mike, I know when we reviewed this and discussed this, you had a couple thoughts. Did we capture everything here? And maybe you can elaborate a bit on this from your experience.
Yeah, Eric, I would say you definitely captured it. I mean, when I think about C-suite hires that go awry, I think the direct piece is a small part of it. I mean, for us, if our hold periods are typically, let's say 5 to 7 years, you lose out on kind of a C-suite hire could kind of hold you back a year or two in your investment period. It slows down growth. It confuses the customer sometimes. And it really kind of creates confusion and uncertainty in a company. And we're investing in growth companies, and so you don't want to ever slow down that momentum. And so finding a C-suite hire that doesn't work out, often kind of leads to time delays and just like momentum killer. It's a momentum killer. And so that to me is the bigger risk, and I think those are the things I think about more than the direct costs.
No, I appreciate that. Brian, anything to add to Mike's observations?
Absolutely. Eric, let me do a quick sound check with you. Does that sound better?
Yep, hear you loud and clear.
Okay, wonderful. It's funny how you look at what an iceberg, looks like. It's also the same way I think about the impact in an organization and the benefits and cost of that C-suite hire. It all starts with the CEO. If you get the CEO right, and right means right from an execution standpoint, right means from a culture standpoint, right means from a strategic standpoint, it all flows through the organization. The next layer of executives, the C-suite, the EVP level, they follow that lead, either good or not so good. And then from there, it trickles down the organization. So, one of the things that we speak a lot about inside of Welsh Carson is let's make sure we get the CEO right. And then let's make sure we make the right hires, because a great CEO is going to hire A players. That's all there is to it. And a B CEO is going to hire B and C players. So that's one of the things I would highlight there too.
Great observation, Brian. And you know what? That really hits on our research. When we looked at the last 6 years of portfolio company turnover, one of the correlations we saw was that if the CEO was going to turn over, they typically turned over in the first 6 months. And so getting that A player was so critical. And then from there, you saw other A players join the team, whether it be a CRO, because we know the go-to-market thesis is very prevalent within private equity, or the CFO as we think about return on investment. But Tess, when we talk about that A player in the CEO chair, and I know you focus on go-to-market recruiting, but you've done your fair share of P&L leaders. Tell me a little bit about how you make sure we get that A player.
Yeah, we really focus on assessment, back channels, and more assessment. So when we think about really ensuring that there's an A player in the seat, we go deep on the functional expertise. We focus on behavioral assessments and couple it with back channeling. We actually use our behavioral assessments to really formulate deep back channel questions that get to the root, not only of did the person do a good job, but can we validate their stories? Are there success stories lining up? How do they react under stress? We really, really go deep to ensure that what they're telling us and what they're saying they've done is actually what happened in market and how others view them.
Fantastic. Well, I appreciate the thoughts there. So as we move forward, one of the things, we'll take a brief snapshot of one of the charts that was included in our first private equity report. And as I mentioned, we looked at the last 6 years of executive turnover, but what you'll see here is actually the last 3 years of executive turnover by quarter overlaid by the deal volume. And so what we see is a direct correlation between deal volume and turnover. And so you see in Q2 of 2021 that deal volume hit a high. And then what you see is a lag of approximately 6 months where turnover started to spike in the executive chair. And I think Brian had pointed out earlier today that the definition of turnover spike really is the announcement of a new executive of the role. And so one of the things to think about is when additional executives or the turnover spikes, the actual tightness in the labor market is greater. So there are more folks that are after less executives when you think about that. And what we saw in 2021 truly is a seller's market for talent. And that resulted in OTE comp packages for C-suite executives rising about 16% from 2018 to 2022. In fact, in 2021, we actually saw a spike in go-to-market executives, particularly that CRO role, that actually, for the first time in a long time, outpaced OTE for the CEO role. That is back in line now, and so the CEO is actually top drawer today. But that spike did happen in 2021, and again, direct correlation with go-to-market as part of that private equity thesis. That said, Brian, I talked about this spike in the seller's market in 2021, and wow, that's a tight market for talent. But I think you shared an observation that we might always be in a seller's market for what we want.
That's correct, Eric. I think one of the things really to share here is hiring has become very, very sophisticated. There's more tools to use from a data and a science standpoint. There's a tremendous amount of information out there on the executive world, and there's just more competition. There's more private equity firms. There's more deals. Hiring is really, really challenging now, and because of that, you have to think very distinctly about how you're going to figure out who the best people are and how you're going to get them in your organization. If you look at a chart like this, it kind of tells me two things. One, sometimes the turnover spike is the tide going down. When the tide goes down, as we've seen in the market for the last year and a half or so, folks look for solutions. And a lot of times the way to look for a solution is replacing an executive. You may not actually be solving the problem. You've actually, maybe just, changing up something that, really is a market factor, and you still had a pretty good person in the role. It's something to consider here. And then the second thing to think about in a situation like this is the best people, are always the best folks out there. That doesn't change. And in a market like this, even when there's big turnover and the markets are down, there's not typically more supply of great executives. There's a massive demand for the best executives in the market, and there's always going to be a fight for that talent.
No, I appreciate those comments. Tess, in your recruiting efforts, how do you think about dealing with a seller's market? What are the strategies you use to create a larger cast of characters to choose from?
Yeah, and I think one of the key takeaways in my daily conversations on this slide is that the dip in the market does not create cheaper, more available, easier go-to-market talent specifically, right? So I hear a lot of times, well, isn't it turning? Aren't there are more candidates? Aren't they going to be cheaper? And the answer is no. I mean, I think we can argue that every strategic growth initiative you can name depends on the people to make it happen. And you add the dry powder that's in the market, the candidate market, the seller market, the tight market's not going to go away for a while. So to answer your question in terms of some of the things that we're doing, we're really having conversations with our clients about expanding the talent pool. How can we get creative in the scorecard? How can we push it a little bit? Everybody wants a unicorn, but how can we really dig deep, make sure that we're aligned on what we're looking for, but then be able to deploy some creativity and flexibility in the search process?
Mike, is that consistent with what you're seeing? And are you open to some of that creativity and flexibility in the process?
Totally. I mean, in our business, it's really about finding the best managers, the CEOs and their teams. So it's always a seller's market, and therefore it kind of necessitates creativity. And like for example, in the CEO case, it may be a unicorn to go find the CEO that's done kind of XYZ that according to the spec, but why not go find like someone who was a great number 2 COO or CRO that delivered on those things and kind of take a flyer on them, because I think what got them success in their current roles may provide that same success and blueprint for a CEO role. So that's one example of just being kind of open to finding the best talent and then putting them in the right seat and giving them the support to be successful.
No, Mike, I really appreciate that observation, because Step Up Candidates actually is a vehicle we use quite a bit to open up the scorecard. And our research actually shows that Step Up candidate may be less risky than the proven executive, because they've worked so hard to get that opportunity in the role as one of the reasons why. And so that's something that we'll continue to tease out in the data as we continue to publish the reports. Speaking of the reports, a question did come in about whether or not folks would get a copy of the report, and we absolutely will be sharing a copy of the report to the webinar participants post this webinar here. Appreciate the questions coming in. We will address them either in the flow if appropriate or at the end of the webinar, but please keep them coming in. So when we look at the first teed up question, in a seller's market, what are some of the things we can do to get a great candidate with feeling like we settled or massively overpaid? And so one of the things we just addressed here was the Step Up candidate. Brian, in your mind, what other opportunities do we have?
Well, I would say that in situations like this, where it's super competitive in a seller's market, it's very important to think about how you're going to approach the search from the very beginning to set the right scorecard, set what the unicorn scorecard looks like, but then create a couple not contingency plans, but just offshoot plans. Like, where can you give a little bit? What are the areas where you could take a 7 out of 10 or an 8 out of 10 instead of a 10 out of 10, so that when you do start interviewing real life candidates, and every candidate is not a 10 out of 10, particularly in a market like this, the areas that you can give on. And I think what winds up happening in these sellers markets is, folks become very frustrated because they interview based on, a unicorn scorecard. And they don't give themselves the leeway to remember that no one's perfect. And you're looking for, a phenomenal executive, but you will have to give somewhere. Everyone has to give somewhere. But you have to be very systematic and thoughtful about where you can give and where you can't give. And then, do the referencing and the back channeling and everything you need to do to really pressure test. Does this executive and this candidate match that scorecard, the adjusted scorecard, the way you need to?
No, makes a lot of sense. Mike, what observations do you have in terms of opening up the scorecard beyond step ups?
I mean, I think it always comes down to kind of trade-offs. Like, and oftentimes what happens is people fall in love with like the package of, someone just very charismatic and, kind of seems like a CEO or kind of seems like the right CEO. And for us, we try to really just dig in deeper to say, let's kind of putting aside, kind of characteristics, like what are the actual things someone has done to, kind of to demonstrate that they can actually get into the weeds and really execute on a plan. So we try to think of it in a different way than, they check all the boxes on the scorecard. Can they actually do the job? Can they get into the weeds and pull back and kind of motivate their teams? I think that's probably, one other way we think about it. But that said, we never want to settle. I think ultimately for us, it's not about settling. I'd rather that we find someone and, if we have to overpay to some regard, like I think that's part of it. And you think about the value of an executive team and a CEO, the ROI for someone that's good is going to far outweigh, what their short-term kind of compensation needs are.
Absolutely makes sense.
Eric, real quick, I just might jump in with one other comment on this, is that, on this question in particular, the term overpaying for me at times can be, a little bit of a troubling term, in the sense that when you think about the money at risk here to execute on a company purchase in private equity, on the upside and on the downside, clearly we want to keep parameters around our compensation, and I'm not trying to make light of it, but good is good. And when you can get good into your company and into your private equity firm, it's not even just this deal. Someone great is someone you can use inside your firm for decades, potentially. The multiplier effect on the upside, and candidly on the downside too, of what that executive from a pure compensation standpoint will contribute to the value of that company in your private equity firm is monumental. So I would just kind of keep that in mind as well when we talk about terms like overpay.
And the incentives, you can structure those in a way that actually aligns with outcomes, right? So if you exceed EBITDA, by X, like I think you can structure it in a way so that it's not just an upfront sunk cost, like you're getting benefit because it's aligned with what the compensation is.
No, fantastic. Both great points. And if you guys don't mind, we're actually going to go off script and bounce around a little bit because we've gotten some wonderful questions in from the audience. And so, Tess, when we think about a step-up candidate, obviously the tools we have at our disposal, interviewing, resumes, back channels, and the like. But the question that really came in is leveraging the assessment in the step-up candidate. And I think about the go-to-market world and our use of assessment in the go-to-market world, because I personally, when you get at this level, haven't met a go-to-market executive that interviews poorly. It's the distinction of the thing behind the thing. And we talk about big hat, no cattle, or actually having the cattle go with their big hat. Tell me a little bit about what assessments we use and how we leverage those assessments in that step-up situation.
Thanks for the Texas analogy, Eric. Appreciate
Right?
that as always. The big hat, no cattle. Yeah, so when we think about assessment, it's really in 3 phases. We've talked quite a bit about the functional assessment, the scorecarding, how we deploy creativity in the scorecarding. The behavioral assessments, and unique to Bespoke, we are paired. The executive search team is always paired with our leadership advisory practice, and they are experts in utilizing the Hogan assessment. So in our search process, we provide the candidates with the Hogan assessment. Not every single candidate, but it is earlier in the process. We want to avoid getting to the end of a process, doing a 4-hour battery on a candidate, and then realizing that we've all fallen in love with someone that has red flags and that we don't feel comfortable moving forward. So we'll utilize the Hogan assessment early in our process. And for those of you that may not know, Hogan is a behavioral assessment. It's about 30 to 40 minutes online, pretty light touch for the candidates, but the amount of data that we get back and the ability for our leadership advisory practice team to really tease out insights and questions, and again, go to that question behind the question, is phenomenal. And so the search team and our clients and the interview teams are armed with questions, behavioral questions to ask throughout the process. And we really find that it couples well with back channels and helps us get that 360 view of the behavioral and I think most importantly, the culture fit that the executive is going to bring to the organization and with the ELT.
I appreciate that. Well, let's move on to the next question we had there was, what's the most profound and lasting impact of a bad C-suite hire? Brian, do you want to touch on that for us?
Sure. I'd be happy to. I just think in every sense of the way, when you make a great C-suite hire, the impact from the standpoint of the execution is phenomenal. It's just incredible. I think it all stems from they know how to identify the right talent in the organization underneath them, at least one layer down and sometimes 2 or 3 layers down, because they understand the details. They execute meticulously. They bring in people who follow their lead from the standpoint of executing. And most importantly, when you bring in the right people in the C-suite, particularly the CEO, they mirror the values of the private equity firm. Remember, we come in with a plan in place and what we want to do with this company over a period of time to achieve the goals that we have for the company. We're growth-oriented middle market private equity. We like to build great companies that thrive, not just for a few years, but for the long term. And we love to hold our companies for a long time. With that in mind, having a CEO and then other C-suite executives who mirror that value system and truly understand what we're all trying to do together as a team here. And it's not an individual sport. It's not about certain people getting certain, status or monetary gains out of this. This is for us all to win as a team and win a championship for the long term. Everyone, the folks in the organization, when you make the right hire in the C-suite, they mirror that same value system within our private equity firm.
Makes a ton of sense. And Brian, you've referenced that CEO many times, and that, you know, it no short how important that hire is. Mike, maybe you can do a spin on this. We got a question from the audience about the investment thesis and hire or investing in a company that has a team / CEO versus replacing the CEO. And how does that manifest at Providence?
Yeah. So for us, you know, we are back. Our philosophy is we're really partnering with management, and we're backing management as often as we are backing our companies. So when we make an investment, we're making, you know, we're saying we're partnering with you, CEO. We believe in kind of what you're building, and you know, we're not looking to replace that CEO day one. We're growth investors, and when we look at our investments, we're looking at growth companies, and the CEO has already kind of grown the company, and we're trying to kind of take that to the next level of growth with our expertise and capabilities. So we're really backing management. And so the question for us is not, are we going to replace you, CEO? It's more of, how can we help you bolster your team so that you can drive faster go-to-market, so that you can drive a faster M&A strategy? So how do we get kind of additional folks to actually get you from, you know, say 50 to 100 million revenue to 200 to 400 million? And so that's how we think about it.
No, I appreciate that. And I'm going to come back to this and pull this thread a little bit, but I want to hear from Brian. How do you think about the same question? How do you think about the team going in versus, you know, the bringing in the new CEO post-acquisition?
Well, I think we very much mirror, you know, the way, Mike, you described Providence doing it. You know, when you make an investment, you know, the best companies, you feel great about the management team. You feel great about the direction the company has been going, and the execution and the strategic, you know, view of that management team that you're partnering with. Now, you know, sometimes where you're trying to get to over the next 3 to 5 years can change. It's not good or bad. It's just different. And I think that everyone coming in understanding, look, here are the goals over 3 to 5 or more year period that we would like here at Welsh Carson with this company. Here's what we'd love to see the management team do. And let's see how much, you know, can be done in the current state that we purchased the company in, and then what needs to be tweaked, what needs to be adjusted a little bit here and there. But you know, a great company that we purchase that we think can get even better and become phenomenal is largely because they had great management behind them for a long time.
No, I appreciate that. And Mike, we're going to get back to the resourcing in a minute, but boy, the chat is just blowing up with assessments. And so what I'd love to hear from you is how you all lever assessments, and we're talking behavioral assessments, in the investment process to determine whether or not this is the right team to back.
Yeah, I mean, you know, I think I credit Bespoke because one of the things that we often use is the Hogan assessment. And when we work with Bespoke, it's such a great tool to have and gives you kind of additional insights to inform how you approach the interviews. And so I think it's, you know, we do kind of those sorts of behavioral assessments. The other thing that we started to do more of is this notion of how do you trial somebody? Like, you know, it's ideally, like in a perfect world, you can't, you know, you'd want to give someone a tryout. Can't necessarily do that in a company setting. But when we do an interview process, we're often showing them up front, like here's the last 3 board decks, here's kind of what the company's strategy is, and then having them give their view and really putting themselves kind of in the shoes of whatever role they're interviewing for, and getting some insight into like how are they actually tactically going to address, you know, some of the key issues and what's their strategy going forward. So really trying to get into their, you know, kind of case study mode as opposed to just asking a bunch of questions about the personality.
No, makes a lot of sense. How about you, Brian?
Oh, I agree with Mike completely there. I believe interviewing and hiring has become so much more sophisticated in today's world than it was, you know, even 5 years ago or 10 few decades ago. If you think about the combination of not just doing the standard interview itself, but to layer in that case study almost presentation where you can actually see the dynamics of that executive that you're interviewing and how they work with the team. To take that and layer that into the ability to use assessment, whether it's, you know, a Hogan or maybe it's a behavioral interview, but that really works. And then you layer into that the deep referencing that can either validate what you've come to realize or believe in the candidate, or uncover things that might be different. I think the combination of those three things in particular have taken, you know, our approach to interviewing to a whole new level and allowed us, you know, to really do a much better job of knowing what we're getting at the end of a search.
No, I think that makes a ton of sense. And Tess, you know, we've referenced the sophistication of the interview process, leveraging behavioral assessments, case studies, and data. We had a user challenge whether that has really resulted in success for us. And I think we've put our money where our mouth is in our industry-leading 2-year guarantee. But maybe you can talk a little bit about how those three things come together to drive, take a data-driven process to get the right executive.
Yeah, you know, I think you've hit the nail on the head, right? It's the functional expertise, it's the behavioral expertise, and then it's what we call the kind of strategic expertise or assessment. With the strategic case studies, we're often looking for what metrics are the candidates going to bring to the table to really ensure that their teams are successful. What resources do they think they need from a human capital, cash, IT perspective? Really have them talk through, you know, money is not just going to be laying around. You've got to come in and really know your resources and what you need to be successful. And then, you know, how you're going to prioritize and plan. And you can't do everything all at once. And so we have, because we're functionally organized here at Bespoke, we have go-to-market, we have CFO, we have CEO, strategic frameworks that really help our clients think through what are the questions and how do we really make it a working strategy session.
No, I appreciate that. And there was another question that came up around just the timing and the frustration of these additional assessments and case studies and the like. But one of the things I'll just point out, because I really want to get to this resourcing question that we do is we've been accused of issuing the business person's Hogan. And the client that told us that said, hey, don't take offense because you don't spend a lot of time telling us the science behind it. We expect you know the science. And so in our process, we actually use the science of the Hogan actually to help Mike and Brian guide their interview questions, how we leverage our back channels and the like in that. And I think that really minimizes the time it takes to do these additional assessments. But with that, Mike, I really want to get into the thread you started earlier around, okay, so I've got this CEO in the chair and the resources you bring to bear to help make them successful in that situation.
Yeah, so you know the way that we operate is we have our and I'm on the portfolio. I lead the portfolio ops function. You know, we have a team of kind of multiple resources that can help our companies, and so we've got our portfolio ops team that really helps on overall value creation and really focusing on the organic side. We've got a group that can help with origination on M&A tuck-in opportunities. We haven't talked about operating partners yet, but we have operating partner or senior advisors who are former C-level executives. And that collective plus our experience investing in our core sectors and investing in growth kind of give us the playbook and the pattern recognition and the tools to deploy with the CEO and the company. You know, it's always here's kind of how we can help you, but let us help you in the way that you can absorb it and leverage it, as opposed to we're just going to inundate you and here's this waterfall of information. You know, let's pick 3 things because you can only focus on 3 things at a time and really help us prioritize what we can do to help drive that value creation.
Fantastic. How about you, Brian?
Yeah, I think you're exactly right. You know, we talked a little bit about the assessment process. One thing to highlight here, and I think Eric, you touched on this a little bit, is that it can be hard for candidates to go through that level of interviewing and then go through that level of assessment, as well as referencing. That's a hard process for candidates as executives to go through. One of the things we really describe is the process is not a way just to evaluate an executive, but as a way to understand, okay, here are strengths and weaknesses, and how do we help you um, perform and execute at your highest level in alignment with our goals, with this company and our firm values. And when you bring an executive into a long process like that, but you can frame it as, use this as an incredible learning experience for you, and use this as a way for you to reach your ultimate potential in the role working with us, because we want to help you be great. We want this company to be great, and we want you to be great. And all these things we're doing along the way here are going to help you reach that point. I think the way you position things like that can really be advantageous to the overall process and your entire relationship with the executive, especially when you bring them on board.
No, I think that's absolutely right. And just anecdotally, as folks may know, we actually are sponsored by AEA Growth Investors, and they effectively have brought the weight of their firm to help us be successful, from being a strategic thought partner, introductions at the right time to folks that we're trying to get in front of, or actually just even leveraging some of their analyst resources to do analysis on strategic deals and strategic planning. And so I can't emphasize enough the value that a good private equity partner like Providence, Welsh Carson, or AEA brings to the equation as you're trying to execute on that value creation strategy. So when we look at leadership hiring, some say you can hire quickly or you can hire right, but not both. What are ways to actually do both, Brian?
I find, Eric and Tess, this to be one of the most fascinating questions / challenges in our business, is that you think about the risk to your business of not getting somebody in the chair and then giving them the amount of time they need to ramp up in the role, which can take a quarter, 2 quarters, 3 quarters, whatever it is, for them to be really effective. The longer that process takes, the more risk you put on your business. But on the other end, I call it the hiring conundrum, because on the other end, if you try to achieve perfection and find that unicorn and make the right hire, even the perfect hire, I've seen searches that have had a birthday. It goes past a year, and that's pretty tricky, because all of a sudden we're talking about something that could be a 1.5 years or 2 years of impact on your business. What I would say is this: there's no easy answers, of course, but I think about, as somebody, as an old football guy, I think about what an incredible offensive coordinator does in the NFL. The highest level of competition in the world in football. The amount of rigor they put on their game plan. They put a great game plan together, the unicorn game plan. Then they come off it, like we talked about, that scorecard is, what do we do, if we're not as good in this area, not as good in that area? How do you create alternate game plans, knowing that you're going to be faced with different things walking, into the game, and your players are going to perform at different levels? Then how do you go about executing that game plan meticulously? And I think about it in the search world. It's not like a station by station process. It's not going from one weekly status call and then no information until the next week, the next Thursday, when you have your status call. And you get a bunch of information there, and you kind of wonder what happened, what kind of sausage was made during that week. You have a very dynamic execution, nimble execution oriented game plan, where you change it minute by minute, hour by hour. And when an incredible candidate, pops their head up, you strike, and you don't wait for that next status call. And you start to put a plan in place to do all the things you can 5 days earlier than you would have normally. So, Eric, a long way of saying to you that there is a very systematic, execution-oriented approach to both solving speed and quality, and to solve the hiring conundrum. But you have to have an execution mindset, and you have to take a whole different approach to search and hiring if you're going to be able to solve it in a really competitive market like today.
No, I appreciate those thoughts, Brian and Tess. I mean, we pride ourselves on days to close. I think when it came in, 2022 was about 90 days to close. Can you talk a little bit about balancing the days to close with our 99% success rate, which is executive in chair 2 years after we placed them?
Yeah, absolutely. And Brian said a lot of what I would say, right? It's having a partner and a team that's execution focused, that is worried and focused, every single day, every single minute, nights, weekends, it extends, time doesn't stop for these executives, and ensuring that you're not shortcutting the process, but that you're also moving quickly and you're asking the right questions throughout, you're responding to what the candidates are saying and what's happening in real time. And a lot of it really goes to having a very detailed process. Here at Bespoke, we've mapped our process. It's over 362 steps. And not to say that to scare anyone, because much of it is automated, but there's 5 of us on a search team, all in lockstep, and we know how to compress it and how to drill deep when we need to.
Well, and I think just to emphasize the other thing, Tess, though, is the intense focus on the software industry by and large. And you think about the service we launched formally in March, the Strategic Resourcing Group, where we have actionable executives at the ready. And by focusing on the network, we know who's available, and so oftentimes can solve the search before we get started. And so I think that focus is part of balancing that out. I want to make sure that we keep moving ahead, and this one, and Mike, I want to get to your comments on a minute, but Brian really seeded this one. Are there times where you just go with a B player, Brian?
So this all kind of stems from there's been a couple comments in the chat about when we keep saying unicorn hiring. Let's be clear. A unicorn is a unicorn because it's a unicorn. Like, it's next to impossible to get. When you make a scorecard for a hire or for evaluating what you need to maximize that role, I'd come off the unicorn world. Make a scorecard that's achieves greatness, but is also achievable in going out to find somebody who can do that. Okay, so it's a scorecard of excellence, maybe not unicorn. But Eric, this goes back to this point here. If you create a scorecard of excellence, and then you back that off just a little bit and see where could you compromise on the scorecard? Where could you take those 7 out of 10s in the categories, and what categories, are uncompromising? It has to be a 9 or 10 out of 10. But if you think about the combination of attributes to have that slightly backed off scorecard, and all of a sudden you look at your team and you see somebody who you've kind of labeled a B player, but you actually do the work to map them to that scorecard, that backed off scorecard. They may not be a unicorn, they not be the perfect candidate, but mapped to that backed off scorecard, they can be pretty good in achieving what you need to with that company for your firm. And so I would say it doesn't always happen that you back into staying with a B player, but a lot of times, let's just say maybe 30% of the time, 40% of the time, that B player really isn't a B player. They could be a B plus or A minus player. You just have to understand the trade-offs of what they're good at and what they're not, and how that marries to what you need.
Mike, what are your thoughts on this topic?
Yeah, I mean, well said, Brian. I was going to mention the trade-offs thing, because if you think about B players, to me, the lever is either you do everything in an average manner or in a B manner, and that's just kind of the highest achievement, or it's candidate has 8 out of 10 elements of the scorecard, and you have to choose what you're going to pick. Often in the real world, that's what happens, right? You've got 10 elements of the scorecard, and 8 of those are like, yeah, this person absolutely has done it, can do it again, great culture fit, but they don't have these 2 things, and whatever it is. And I think sometimes you overweight all those 10 elements, and you have to really kind of weight it so that you're, both realistic and kind of saying, hey, this person doesn't have these 2 things, but our operating partner can help them with kind of this 9th thing, and Providence can help them with this 10th thing. And so I think we're gonna, this is someone that can be successful if provided the right resources.
Mike, you mentioned culture, and culture fit as a key driver to this. And that's something that is near and dear to our heart when we think about, we're not just hiring qualified executives, we're hiring qualified executives that can execute the investment thesis and, importantly, complement the current culture. Tess, a question came up in the chat around this. So do you want to talk about how we do that, leveraging the assessments?
Yeah, absolutely. So we talked a little bit about utilizing the Hogan assessment in the search process and with candidates. but our leadership advisory practice actually teams with us to provide or to assess the existing executive leadership team with the Hogan assessment. And what that, and normally we do this in conjunction with the search most of the time, but we can do it outside of a search. Right now, we've just launched a couple where we are doing it with the search. And so our leadership advisory practice will give the Hogan assessment to 4 or 5 executive leadership team members and do a full readout of the way in which they interact, where there are gaps. And then as you are assessing candidates, you have something to measure it against. And you can see these 3 candidates, how they're going to stack up and how they're going to come in and be a culture fit, right? It sounds pretty simple, but when you see the Hogan readout, there's so much data and really focuses on how people show up in a good day, how they perform when they're stressed, which we all know happens in PE-backed environments, and what are their values, what are really motivating and driving the individuals to achieve together. And that's why, Eric, like you mentioned, when coupled with our search process, there's a 2-year guarantee on our placements, because we believe so strongly in this idea of culture fit for the lasting, execution of value creation.
No, fantastic. I appreciate you covering that. Tess, a question came up for you, particularly as it relates to go-to-market executives and the demands on compensation. Outsized OTE, outsized equity, upfront signing bonuses, and the notion was they have some trepidation about joining the company. Is that what you see, or is it more market-based demand?
Yeah, we're still seeing a little bit, Eric, you mentioned the CRO compensation surpassing CEO in 2021. We're still seeing high and somewhat outsized compensation packages. Mike, I think you brought this up earlier, right? There's ways in which we're helping our clients get creative in the bonus structuring and matching it to performance, especially for sales leaders. The CMO and chief customer officers, are still highly comped as well, right? It's just a fallacy in the market that they've all come down, but I think there's ways in which we can get creative. And at the end of the day, and we are still seeing candidates with multiple offers in front of them, I really get back to the question of, is this the job you want? And if you want this job to work with this private equity firm and you feel like you can execute on the investment thesis, then let's figure it out. Let's figure out all of the levers from cash and bonus and equity, and really focus the individual on the role and being successful. And you'll find that most of them come out of just making the money, because that's what it's not all about at the end of the day.
Mike, Brian, any thoughts, particularly as it relates to go-to-market executives and the comp packages?
I would just jump in, and the one thing I would start with here is, Tess, you make a really great point. Whether it's somebody with a go-to-market orientation or any senior executive on the team, particularly CEO, they need to want to be a part of this organization. They need to want to work with us. They need to get excited about the company and wake up every day excited about what problems this company is solving in the market. The comp typically works itself out when you can have a conversation with an executive and both sides really believe in the partnership and what you're going to do together. And so that's, I think Mike brought this up earlier, is that we're all smart enough to be creative about how to structure compensation in a way where everyone can win. And a lot of it can be based around, incentive compensation for performance. We do a lot of that. And it's a wonderful way to find the people who, if someone's excited about a role and know they can do really well in the role, they're going to be able to make a lot of money because they're going to execute on the things that are part of those incentive structures.
Mike, any thoughts on that topic?
No, I think it was well said. I mean, the only thing I would say is, and you want them to have fun. Like if it's a slog and they're just in it for the buck or the compensation, like it's pretty miserable if you're just at the wrong place or you've got the wrong role or you don't have the right fit. So I think ultimately the success is that person successful and is the company successful? I think that's a key part of it.
No, I appreciate that. Question came in through the chat regarding diversity and what we're doing around diverse candidate slates. And I think, Tess, we just published something recently that we did a look back on the last 2 to 3 years. And I think that 40% plus of our placements have been diverse or underrepresented. And that's not slates, that's actual placements. Mike and Brian would love your thoughts for the audience question on how you all are thinking about diversity or underrepresented candidates.
I mean, for us, it's really important. And I think, the way that we approach each search, and this is something that we ask, I think probably the first or second question we ask Tess when we do searches with Bespoke is, tell us how you're going to kind of find candidates from diverse backgrounds, and, where are you going to look, how are you going to present that slate? And then, really setting some sort of metric or benchmark on, we want a pipeline that looks at least kind of this percent that comes from diverse slates. Ultimately, I think the funnel has to be large enough, and you have to kind of have the slate, kind of be robust enough that you can actually kind of leverage that and find success in actually hiring diverse candidates.
Mike, that's a great point. I think I would just, add in or comment on here that, we had talked a little bit about assessing executives based on culture and culture fit. A lot of our DE&I initiatives at Welsh Carson and broadly in the industry are to make them long-term and permanent and systematic. It's about changing culture. And so just fitting, here's an interesting thought for everyone here. Sometimes you'll assess an executive to see if they match the culture and they're a good fit for that culture. But maybe the culture is wrong. Maybe it's the entire culture that we all need to take a look at and assess what we need to build the right culture 3 to 5 years from now in a company and in our firm that may be different than what has been the case for the last 5 years. Doesn't all have to be bad, but there are probably pieces of it that need to be changed, distinctly. DE&I fits very, very smoothly and strongly into that, because if you assess the culture you want to have in that organization over the next 3, 5, 10 years, it makes you think very differently about the way you hire and who you hire and where you look for people. It changes the entire nature of the search relationship, and it changes the whole way, like we work with Bespoke on our searches, on the candidate slates that we see for our companies based on that culture we want to achieve in the company.
No, I appreciate those thoughts. And clearly there's more work for all of us to be doing down this strategy. But the important thing is we're talking about it, we're moving forward, and we're asking the hard questions, Brian, you said, around the culture. And what are we trying to accomplish for the future, and what mark that we want to make? Speaking of mark you want to make, we agreed that we were going to wrap this up on a positive note. I think we've had a very lively discussion around the current state of the market, the cost of a bad C-suite hire. Let's go around and just give me your top strategy for mitigating the risk of a bad hire. And maybe Brian, we'll start with you.
Sure. What I would say is I find everything in the world today to be an incredible balancing act between art and science. The more tools we have at our disposal and the more information we have means just more data. And we've seen it just exponentially expand our reliance on data and our belief that data gives all the answer. Art is still very important. We all have a lot of experience, and I've been in the search industry for over 2 decades now in some way, shape, or form. Thousands and thousands of interviews and lots of hires. That still matters. That that perspective and the ability to really just not just say what does the data say and what does the resume say, but what are the things behind the curtain that we really need to think about, and we're going to find out through referencing other things. So I would just emphasize that when everyone does their hiring, try to find that right combination of art and science, and to go ahead and do the right processes and make those right hires.
Mike, how about you?
Yeah, we just had the Boston Marathon here yesterday, and it kind of reminded me, like, you always have to run your own race. And for us, regardless of the market landscape, regardless of all those things and the externalities, like, you have to run your own race. So it's, never, always set a high bar. Like, we always set a high bar for ourselves. We're not going to settle for candidate just because the market's tight. It's what are the things that are most important to us? And then where are the gives? Like, where can we, kind of give them potentially and help support the candidate through our own resources, and then ultimately, support them as best we can, and just never settle.
No, I love that idea of running your own race and focusing on what you can control. It's an old baseball term, Brian, control the controllables. But I also love the idea on the science and the art. And that's what we talk about all the time, is that by having the data, we get to paint with all of the colors in the palette as opposed to just some of them. But Tess, I'll leave it to you. What closing thoughts do you have on mitigating the risk of a bad hire?
I really focus on specialization. And so if you think about Bespoke, we're focused industry-wide in software. We have a strong base in PE clients. We're focused functionally. And that'll drive you to a network. And most importantly, the relationships. The relationships, like Eric said, help early on. If you're thinking, maybe I need to replace this person, maybe I don't. Who else is out there in the market? We have a network, and we can help you understand what that market looks like before you invest in a full search. Once we get to the search, we're then able to, talk to the right people, get the back channels. But if you don't have that specialization and you don't have that focus and really the partner, you tend to be all over the place, and it takes quite a bit longer. And the bad hire may show up in there. So I always go back to specialization and just being really true to the end market.
Fantastic. Well, I appreciate everybody attending today. One of the things that I do want to do is make you aware, check out the Private Equity Talent Benchmark Report that will be released after this meeting. Brian, Mike, thank you for being great friends, partners, collaborators as we continue to try to move the private equity talent needle. Tess, as always, thanks for being a good partner in crime and collaborator on this journey. Thanks to Hunt Scanlon for hosting a wonderful webinar. And I wish you all a wonderful day and strong hiring.